Nick Hodge here, and I wanted to talk about your long-term financial security and how it relates to Wall Street and how Wall Street and financial institutions and advisors can prevent you from attaining that long-term financial security. So here's a chart I wanted you to look at. This is a Vanguard Target Date Fund, a retirement fund for 2025. This is a fund for people who are expecting to retire starting between 2023 and 2027 is what the Vanguard website tells us. And this is a fund that automatically adjusts a typical 60-40 retirement or long-term portfolio as you age. So starting with, 60% stocks and 40% bonds and taking you more into bonds as you approach your retirement age, in this case with a target date of 2025. The only problem is that this target date 2025 retirement fund hasn't gone anywhere in an entire decade. It's trading at the same value today in 2023 that it was trading at in 2013. And that means retirees expecting to retire starting this year, teachers, firemen, nurses, etc., your mom, your dad, my mom, my dad, just lost essentially 26% of their nest egg over the past couple of years, leading to that lost decade of wealth that I was just describing. And so, imagine having a $500,000 nest egg and seeing 25% of that erased in the 2 years as you head into retirement age and just watching your nest egg wither away. And unfortunately, this is all too common in the game of long-term saving, retirement, and wealth creation in the United States. And there's some specific reasons here. You have a stock market that's been in a downdraft since 2021, still not back to the peak it was at the start of 2022. The S&P I'm talking about, you have no breadth in the market. Equal weighted S&P is relatively flat for the year with only a small handful of tech stocks buoying the rest of the market. And so unless you own those, you've had a really tough go of it. And then bonds, which no one seems to understand or want to talk about, have had what Bank of America is now calling their worst bear market of all time. And all time, of course, is a long time. It means forever. And so if you have a traditional retirement long-term portfolio based on Wall Street's prescribed pie chart, your retirement account, especially as evidenced by the target date fund I just showed you, has been annihilated. Bonds have had their worst year in something like 150 years as the Fed has raised interest rates. So not only are these retirement portfolios that are set up and pushed by Wall Street eroding your nest egg by 25% in 2 years, it comes at a time when costs are the highest they've been in 40 years, at least in terms of the rate of inflation. And so people, especially retirees on fixed incomes, need more money. At the same time that their Wall Street-based retirement portfolios had just experienced a lost decade. And it's not just retirees and near retirees. I'm not even 40 years old yet, although I'm dang close to it. And I've been thinking about my long-term wealth for a decade now. It's likely why I've had success doing that. I'm Nick Hodge, by the way. I run Foundational Profits, which is a monthly newsletter where I tell you exactly how I'm positioning my long-term wealth. And the November issue is out, and it's an important one because we're heading into stagflation. We're heading into low domestic growth here in the United States. Europe's already in a recession. Asia is reporting terrible economic data. I just told you the bond markets are in their worst bear market ever. And the stock market's been down since the beginning of 2022. So where do you turn? If I look at the performance of Foundational Profits over the past several years and then compare it to that target date fund that I was mentioning earlier, since 2018, that target date fund has delivered something like 22% returns. I'm talking about cumulative now. The return every year added up since 2018, whereas the portfolio that I use, and that's always changing, by the way, and that I write about monthly in the Foundational Profits issues, is up 123% in that time. So it's outpacing the annual return of that Vanguard target date fund by 5 times over. And I do it in various different ways. We buy country ETFs, we buy sector ETFs, we buy commodity ETFs, and we're not necessarily always holding them for the long term. We just sold in India, a country India ETF this month for a gain, and we don't own a lot of stocks or equities right now, and we certainly don't own any bonds. So in this November issue, I get into exactly what you can expect for the rest of the year in the stock market and the economy as we head into Thanksgiving and Christmas. I look forward to what you can expect in the first quarter of 2024. The second quarter of 2024, we look at jobs, we look at GDP growth or non-growth or stagnation, as it were, in fact, and we look at inflation. And then I go through exactly how I'm positioned for the next couple of months. And this is a crucial juncture because we're at a time where not a lot is working in the market, whether that's stocks or bonds. And so, I can count where 75% of my long-term wealth is in 5 different positions. That means that I'm highly concentrated in a couple positions that I believe are, one, going to insulate me from the stock market. I don't want to call it carnage, but certainly the additional downside that I expect in the stock market over the coming months. And then a couple of concentrated positions in sectors that have been performing well, and continue to perform well. So this issue goes through the full portfolio that I'm invested in right now, and exactly what allocations I have in those positions. There are cash positions, to be sure, considering that the short-term T-bills are yielding over 5%, but there's also several gold positions, uranium positions, a defense industry position, some critical metals positions, excuse me. And the rest of the issue covers insights on what I see coming for the next couple of months in different sectors of the market. AI, for example, and a couple of other tidbits for how I'm managing my long-term, what I call safe wealth, but some people might call the retirement portfolio, how I manage my IRAs. And I also have an interesting section on how you can manage your retirement account that you might have through work, where you might not have the options to invest in any stock or fund you want, but you're restricted to a certain list of ETFs or mutual funds. I have an allocation template for that I put forth as well, given the current conditions that we're facing. So look, the long-term stewardship of your capital is the most important thing for you and your family. Is a determining factor in educational success and health success, etc. And so if you're behind, if you think you're behind, if you want to get started, then what I've just said is that Wall Street doesn't have your best interests in mind, and I just showed you how someone who used a fund meant to have them retire in 2025 just lost a quarter of their wealth over the past 2 years, and has the same bottom line today in 2023 as they would have had in 2013. So that's a tragedy and a travesty, and it's frankly what's broken with Wall Street and the financial advisor system. And there's a better way. There's a way to avoid drawdowns. There's a way to manage and steward your own capital. And if you haven't found that way or figured that way out for your own, then I encourage you to copy someone who has pioneered that long-term strategy of investing successfully. And I offer a blueprint for you to do that with the foundational profits portfolios and the monthly issues that you get. And oh, by the way, it's entirely risk-free. So you have 60 days to try it out. All the risk is on me. And even if you wanted to subscribe for the November issue, see my current retirement allocations, and then contact customer service to get your money back. I guess I encourage you to do that, though I don't want you to refund, but I don't think you will once you see what foundational profits is all about and the system I've set up to manage wealth over the years. I encourage you to check it out and read the November issue, and look forward to welcoming you as a new member.